Today, we are going to discuss some of the topics that you need to know about in the basics of market structure. At the end of the video, you will gain basic market structure knowledge, which includes what is market structure, bullish market structure, bearish market structure, break of structure. I have explained these concepts in a simple and easy to understand manner for beginners, using charts as examples. Now, let's get started. Okay, first, what is market structure? It's simply the way the market moves, which means the highs and lows. We can understand more about market structure by examining different types of structures. The first one is bullish market structure, and the second one is bearish market structure. First, let's discuss bullish market structure. A bullish market structure is characterized by a series of higher highs and higher lows in the market. If you observe the price movement here, you can see that it goes up, then down, up again, down again, and then upward, followed by a pullback. This sequence represents an uptrend. Let's plot the higher highs on this chart. These are the higher highs in the bullish market structure. Now let's plot the higher lows in the market. These are the higher lows in the bullish market structure. The combination of these highs and lows creates the bullish market structure, indicating an uptrend. Now, let's discuss various market structures, starting with a downtrend. A downtrend is characterized by a series of lower highs and lower lows in the market. If you observe here, the market is in a downturn. Let's identify the bearish lower highs in this bearish market structure. These are the lower highs in this bearish market structure. Now let's identify the lower lows in the downtrend structure. These are the lower lows in the bearish market structure. These highs and lows constitute the bearish market structure, indicating a downtrend. So now you understand that market structure refers to the highs and lows in the market, and it helps identify trends such as uptrends and downtrends. Now, let's see if we can verify it with an actual chart example. The price is clearly in an uptrend because it is forming higher highs and higher lows. So, it is evidently in an uptrend. Now this is a downtrend because it is forming a series of lower highs and lower lows. So, it is precisely where the market structure is. Now let's discuss what a break of structure is, abbreviated as BOS. In this example, the price moved up and made a pullback, forming a higher high. Then, the price broke down the previous high. This occurrence signals a break of structure, indicating a shift in the market dynamics. When we experience a break of structure, we can identify the formation of a new higher low. In simpler terms, a break of structure denotes a change in the market's directional movement, and it helps us recognize the establishment of a higher low in the uptrend. Let's plot the break of structure on an actual chart. In this example, we are going to use the obtained uptrend. These are the breaks of structure in this uptrend. In simpler terms, we just broke a previous high. So, this is the previous high, and we broke above it. Then we need to plot the break of structure from the tie to where the point has been broken. When we get a break of structure, we know where the higher low will be in the uptrend. These are the break of structure in the downtrend. In the downtrend, we are breaking the lower lows in the market. When we get a break of structure in the downtrend, we know where the lower highs will be. And one more thing you need to understand. After a break in the structure, we expect a pullback on that time frame. Keep in mind that I have provided only basic knowledge of some topics about market structure, not all. If you need more in-depth and advanced concepts about market structure, please comment below.